What does all today's economic and corporate news mean for stocks and your investment dollar? Joining us, Jamie Cox, Managing Partner, Harris Financial Group. Tom Lydon, Editor, ETF Trends. Good morning, gentlemen. Jamie, start with you. You heard Mr. Santella. You heard Mr. Pisani. I would only add a couple of people who listened to the FedEx call said the call was actually more bullish than some are reporting it. But, Jamie, what do you make of this? Where are you going on your investment strategy?
Well, Larry, it's obvious that the rest of the world is running away with the spoon here. You know, we're falling further and further behind in the United States, but that doesn't mean investors can't take advantage of it. In fact, there are so many opportunities out there for investors to take advantage of this global opportunity. There are a couple ETFs out there that we like, PGF, the Peril Shares Preferred Bank Shares, where you can get European and also United States preferred bank shares, get large dividends, take advantage of some of the opportunities in banks. You can look at ETFs that focus on international investing. It seems like all the rest of the world is starting to take plays out of our own playbook and use them against us. So I think that unless we get our economic policies in check, we're gonna find ourselves in a world of trouble.
Tom, you're very bullish, and a lot of this has to do with the political environment. Explain.
Yeah, absolutely. Well, again, as Jamie says, things are struggling here in the U.S. and there are opportunities overseas. But as you look at the political environment, all eyes are on the votes coming in November. And right now, the Democrats are kind of in a tough situation. We're not going to see markets move forward until we get some additional confidence here in the U.S. But Jamie was playing my music. I tell you, overseas areas like Indonesia, Chile, great opportunities in ETFs. We saw that in inflation numbers today. Gold and silver continue to move to higher levels, and there's some excellent ETFs available in those areas. And if you look at the treasuries, we know that this bond bubble will burst at one point, and there's a double inverse Treasury ETF, TBT, put out by ProShares, where that's just breaking above its 50-day average. Great trading opportunity there as well.
Yeah, well, let's talk a little bit more about gold, Jamie. Soros calls this the ultimate bubble. He says that gold is the ultimate bubble. Do you agree with that? And what would you be doing with gold at these levels?
Well, I think gold is an interesting animal right now. I think it represents problems in the currency markets more than anything else. But I don't particularly like it at this level. I think that there's a lot of downside opportunity. So I'm kind of steering clear of it at the moment. But I understand why people want to own gold. But for me, and for what I do for my clients, it's just not a right investment strategy for us. But I think if you're concerned about currencies, I think it's an okay investment. But what it seems to be over-owned relative to other asset classes. It seems like people are under-owning stocks and overweighting their asset allocations in precious metals, and that won't last forever. I mean, that's something that's very temporary, in my opinion.
Well, Tom Lydon, it's very interesting. You look at the numbers coming in. The producer prices up 3% year on year. Import prices yesterday up 4% year on year. Where's the deflation I keep hearing about that will prompt the Fed to pump up more money supply to destroy the dollar and drive gold to 2,000? Where is that, Tom? I'm looking for the deflation.
I keep cleaning off my glasses looking for it as well, too, Larry, but we're not seeing it. And to the point on gold, whether it's a safe haven or you're looking to fend off inflation. But the other couple of things, as we're talking about ETFs, there's over $60 billion in physically backed gold ETFs. It's huge. So to a degree, is it a self-fulfilling prophecy? The World Gold Council said demand for gold increased over 400% just in the last quarter. So as I'm at this ETF conference here by Morningstar in Chicago, these are one of the hot buttons that people are talking about.
Okay, you look at this inflation that seems to be creeping into the economy. And Jamie, do you interpret this as actual good news?
Well, I don't know what to think of it at this particular time. It's a little early to tell, but I do believe that the deflation camp is deflated, and I believe that inflation will lead to better things over time. But we need to let things kind of settle out first before we make an absolute determination that inflation is going to be a problem. I think if you're looking at inflation down the road, we have things to deal with, but I think we're going to be sitting along the flat line for a while. But deflation, no. Hyperinflation, no as well, which is good, I think, overall for investors. I think if you're looking for yield, you can get dividend-paying stocks, and you're going to get real yield, which I think will help with tax-equivalent yield in the future if we don't get good tax policy. So I think inflation numbers are going to be helpful.
Tom, can I just, we're running out of time, but I just want to throw you a modest curveball, okay? Are we looking at a stagflation scenario with subpar economic recovery and incipient rising inflation, as Trish inferred? Is that
think
possible?
I think it surely is possible, Larry. I mean, economic numbers just aren't as good as we'd hoped. But from a sentiment standpoint, investor confidence standpoint, if we can get some boost going into year end, if we can break out of this 1050 to 1150 trading range in the markets, I mean, the U.S. needs a jolt of confidence. And if it's the markets, if it's the elections, if it's employment, if it's housing, if we can get back on track, I think we're looking in good shape as we get into 2011.
Okay, the markets need that jolt. Thank you so much, guys. Jamie, Tom, appreciate it.
Thanks,
and when we